Hey everyone, welcome back to Corporate Decoder, the place where we try to unearth the true meaning behind all the corporate jargon. And sometimes things get a little too exciting, a little too quickly. Today we're diving into Hycroft Mining Holding Corporation's latest filing, which sheds some light on a recent stock offering and how it went down. Think of it as a post-game analysis of a financial play. This report, filed as a current report on Form 8K, is essentially an announcement of important events that a company needs to disclose to the public. It's like a company's way of saying, hey, something significant just happened and you need to know about it. The date that's really key here is July 10, 2025, as it marks the earliest event reported in this particular filing. It's the starting point for understanding the events we're about to discuss. We're talking about Hycroft Mining Holding Corporation, a company that's involved in mining, as their name suggests. Understanding their business as a whole helps us make sense of their financial decisions. Now, this information here about Delaware and their file numbers is mostly for official record keeping, telling us where they are registered with regulatory bodies like the Securities and Exchange Commission. It's the corporate equivalent of an address and an ID number. And here we see their principal executive offices located in Winnemucca, Nevada. This gives us a geographical sense of where the company is based. Let's talk about what they trade on the stock market. Their Class A common stock is traded under the symbol ATSBY-MC on the Nasdaq stock market LLC. This is how most investors know and interact with the company financially. They also have warrants to purchase common stock traded under the symbol OMCL, also on the Nasdaq stock market LLC. Warrants are like options, giving the holder the right, but not the obligation, to buy stock at a certain price in the future. The filing also notes whether they are an emerging growth company. This designation can allow for certain regulatory flexibilities, and it's an important detail for understanding their reporting status. The meat of this report falls under other events. This is where companies disclose significant happenings that don't neatly fit into other categories. So back on June 12th, Hycroft Mining announced a big event. They sold about 12.5 million units. Each unit was priced at $3.50. Now, what's in a unit, you ask? Well, it wasn't just a share of stock, it was one share of their common stock plus half of a warrant. A warrant is basically a ticket that allows someone to buy the company's stock later at a set price, which in this case was 4.22 cents per share. This whole deal was arranged with underwriter company stock later at a set price, which in this case was 4.20 cents per share. This whole deal was arranged with underwriters BMO Capital Markets and Paradigm Capital Inc., who managed the offering. And in these kinds of deals, the underwriters often get an extra option called an over-allotment option. It's like a Green Joe option, allowing them to sell even more shares if the offering is popular. In this case, they had 30 days to buy up to an extra 1.875 million units, or shares or warrants. The very next day, June 13th, the underwriters did take advantage of this option, but only for warrants. They bought 937,500 warrants right off the bat. Now, the main event of this filing happened on July 10th, when the underwriters exercised their over-allotment option again, but this time for shares of common stock. They purchased an additional 1,324,117 shares. This part of the deal was finalized on July 11th. So what does this all add up to? After those extra shares were bought, the total number of common shares sold in this offering jumped to over 13.8 million, and the total number of warrants issued went up to about 7.8 million. And the money raised, this increased the total net proceeds to over $45 million. This is the money the company gets to keep after paying the fees to the underwriters. This is a significant chunk of cash. These securities, the shares and warrants, were offered as part of a registration statement filed earlier, back in May of 2024, and then updated with a prospectus supplement in June 2025. This is standard procedure for companies offering their securities to the public. It's like getting all your paperwork in order before a big sale. To share this news, the company put out a press release on July 14th and included it as part of this filing. This press release essentially confirms the details of the over-allotment option closing. Now, there's a little legal disclaimer here. It mentions that the information in the press release isn't officially filed in the same way as the rest of the report for certain legal purposes. It's common language to manage liability, essentially saying this is for informational purposes and doesn't carry the same weight as other parts of the filing. And finally, this section tells us what exhibits are included with the report. It's like the appendix to a book containing supporting documents. The primary exhibit here is that press release we just talked about, dated July 14th, officially announcing the closing of the overallotment option. And then there's exhibit 104, related to interactive data files. This is part of the push to make financial data more accessible and machine readable for analysts and investors. And here we have the signatures, the formal sign-off from the company's authorized representatives. This signature block dated July 15th confirms that Rebecca A. Jennings, who holds the title of Senior Vice President and General Counsel, has officially signed off on this report on behalf of Hycroft Mining Holding Corporation. So what's the big picture here? Hycroft Mining successfully raised over $45 million through their offering, which included common stock and warrants. The underwriters exercised their option to buy more shares, which is generally a positive sign suggesting demand for the offering. This influx of capital can be crucial for a mining company to fund operations, exploration or development. However, it also means more shares are now outstanding, which can dilute existing shareholders' ownership unless the company uses the funds effectively to grow its value significantly. It's a common balancing act in corporate finance, raising needed capital versus the impact on ownership percentages. The company is essentially bringing in fresh funds, but it's important to watch how these funds are deployed to ensure they translate into tangible value for shareholders in the long run. What do you think about this offering? Let me know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe to Corporate Decatur for more insights into the world of business and finance. And don't forget to join our Discord community for more discussions and to connect with fellow